Seema.
Indeed. We've got a corporate waiting by to chat with us. So Sula Vineyards is a stock which is on our radar. This is on the back of CLSA initiating coverage on this stock. The target price is set at 475 and they see a potential upside of 40% in the stock. Today as well, the stock is fairly buoyant. It's a gain of close to about 5.7%. Rajiv Samant, the MD and CEO of Sula Vineyards, is now with us on the show now. Mr. Samant, thank you very much for joining in. The first question is actually on the lock-in period. Sula listed exactly 3 months ago. 2 days ago, your 3-month lock-in period ended, and we learned that approximately 5% equity, which was locked in, is now available for sale. Have you heard from any of the shareholders about wanting an exit?
Quite frankly, no, I have not heard directly from any of the shareholders. I'm very pleased with what's happened over the last couple of days. Lock-in, as you know, ended yesterday. And yes, the shares were down a bit yesterday, but today there's been a really nice bounce back in our shares. And I think that, shareholders are focusing on the long-term story of Sula, the medium-term story of Sula, and things like, lock-in periods ending, etc., is starting to be a bit immaterial.
No, the thing is that because usually when the lock-in period ends, we do get an update via block deals or something else that a part of the anchor investors, they've sold something. So we just wanted to understand if there has been any conversation or any potential offloading that any of your investors will be doing.
I have not had any conversation directly with any of our anchor investors at this point.
When is the next lock-in which expires or opens up? And what will be the quantum available for sale?
So I know that at 180 days, the 6 months, of course, yes, lock-in is a significant one for a number of us. I must say that I'm not exactly certain if there's also a 120-day period, but definitely the 6-month period is the next one that's the most crucial, I think, for the stock.
And at that time, what will be the shares available for sale, which get unlocked?
I think something like up to 20% of could get unlocked potentially at that time.
Okay, we get that point. Now let's get to the business, because today the shares are the share price is buoyant. The stock markets are excited about your stock as well. I was going through the last conversation that we had, and of course we are in a time when we are talking about bad harvest, or at least not at the appropriate levels which farmers would like. I know last time you told us that there has been no impact on your harvest or your procurement as well. So are you procuring at lower prices? Because across the board we have been hearing, and our colleagues have been speaking to farmers, doing ground reporting, that yes, there is actually an impact on ground. So if that's not the case for you, our price is lower.
See, most of our grapes come in on long-term contracts. So, variations due to inclement weather do not impact the price of our grapes. So as I said already, we have barely been affected by the unseasonal rains. So we have been able to procure exactly what we need in terms of quantity, and the quality also looks great.
Yes, Mr. Samant, that's what you said, that, last time as well, that there has been no impact on quality or the amount as well.
We are not seeing any reduction in price of the grapes that we're bringing in. That's a contract.
Okay, it's been stable.
Price. Yes, stable price.
Okay, all right.
Okay. You don't have any formal contracts to purchase some of the packaging materials. Are you looking to enter into long-term agreements, long-term supply agreements for packaging materials to make sure that the volatility doesn't impact?
So we typically have 1-year agreements with our packaging suppliers, and typically they renew on the 1st of April. So there might be, because we are in the last couple of weeks of March, it might look like we don't have a long-term supply. But in fact, we have 1-year supply contracts. They renew on the 1st of April, and that's generally pretty well accepted corporate practice.
So when you renew on the 1st of April, around that time, will the overall price be lower than the last year? Is it higher? And if yes, by how much? What's the change?
We are actually hoping that there's going to be a little bit of a reduction. Having said that, in the last 6 months, there was an increase in packaging prices, but we dealt with that well. And we're hoping that for FY24, in fact, prices are going to be slightly lower than the second half of FY23.
By how much, based on the current rates?
I can't really quantify that. It's for us, our supply chain is so complex. Just in terms of bottles, we buy around 12 different kinds of bottles, and each of those goes all over the place. but a fairly significant reduction in packaging material. And I think that we are not alone in that. Consumer goods across the board are noticing things coming down after a very hectic price increase that happened just after COVID.
Okay. Mr. Samant, I was just going through the CLSA note today. They say that they expect gross margins to sustain at the 69 to 70% levels for the next 2-3 years for the company as well. Now that we are talking about these procurement prices being stable, what is the long-term contract here? I'm just trying to understand the market dynamics as to pricing for procurement, and will that impact you in any way, say, in next 2 to 3 years?
So look, our grape prices tend to be pretty sticky. So the contracts in terms of our grapes, we sign 13-year contracts. So that's very long term. And let's understand that grape prices are something like, grapes are something like 70% of our cost of goods. So that tends to be very sticky. So we are not as much, subject to the vagaries of the other consumer goods in terms of packaging. Packaging for us tends to be a much smaller proportion of our COGS than grape costs. And that looks quite sticky. We have great visibility on that going out the next 5 or 6 years. And that's where the analyst report is coming from.
Okay, all right. So, of course, bullish commentary there, and just needed some clarification. While we are at the point of shareholding, Mr. Samant, I wanted to understand the pledge that you have in terms of promoter shareholding. By when do you plan to pay that off?
So I do have a pledge on a quite a small proportion of my shares because I had to convert warrants into shares at the time of the IPO. So I did need to finance a little bit for that. So the way it's going to work is as and when one gets dividends and other payouts, one just keeps paying it down. And I do hope that it should get paid sooner rather than later. I'm sorry, I don't have more detail than that.
What is the plan for FY24 with respect to expanding your distribution platform? Have you made plans?
So we do have a couple of new markets that we're looking at that we hope to announce in our April update, once we have the full details there. But, we are always expanding our distribution reach in terms of our sales force as well. We will be expanding our sales force. We, in fact, shrank a little bit during COVID, and now we're coming back very aggressively. So we hope to be in more tier 2 cities and with more promotion behind that than what we've been in the past. In the past, we've been very metro and tier 1 driven, and we really hope that FY24 is going to be a year of tier 2 city growth.
Oh, okay. While you will look to bring down your pledged shares, why the dividends that you receive from the company, and last year as well, I think you announced some dividend of 4.5, 5 rupees. Could you give us an indication of the dividend policy? And 2, do you have plans to sell any stake in the company to raise some money?
So our dividend policy states that we can pay up to 80% of our profit after tax as dividend. Of course, that's very dependent on what the board decides because it depends on each year's cash flow. We do not ever want to pay a dividend that puts us in a difficult cash flow situation. However, the company today is in a very strong cash flow situation as well as a very favorable net debt to EBITDA ratio. As far as I'm concerned, I am so happy with whatever I'm doing right now with my leadership of Sula. And I have no thought right now or no intention of selling any of my shares, at least in the near term.
Okay, Mr. Samant, it was a pleasure speaking with you. Thank you so much for joining us. So that's Sula Vineyards in focus. The stock is higher by 5.5%, and they are not impacted as far as the unseasonal rains are concerned in terms of procurement, and the pricing also has been stable. They plan to reduce the pledged shares in promoters, and Mr. Samant doesn't plan to sell any shares in the company as well. We'll slip into a short break. Up next, we'll connect with Sameer Shravan of Angel One for some technical trades. Stay tuned.